Yeah, I'm recording this as a note to myself about the trades that I do. So, yeah, today is day one, which is 11th of June, and I'm recording this after the end of the session. So, I have three positional trades, one on ITC, the other on SBI and Nifty. So, I'll just go over the basis for the trade. So, this is for the SBI trade that I have. This is basically an iron condo. So the support was at around 740, 730 to 40, and the high that was made was about 900. So I've sold a call, which, yeah, you see here, right? So I sold a 920 call, 750, and bought hedges on both the sides. And I've done this in the 4 month, in the next month expiry because I didn't want to take the delivery risk. And so, yeah, I've taken, and also because the IVP was really high. So when I took the trade, the IVP was around 95 or 96 for SBI. So I wanted to take advantage of that. So that is the rationale for this trade. And if you look at the break even as well, it's about 11% on both the sides. So it's a pretty broad range, and it's about 10% return on capital for 2 months, which is good, and the margin is also not so much, right? It's just 60,000, and the max loss that I would take on this trade would be 10,000. If you see the max loss is about 10,900, so that is the max loss that I would allow on this trade. So even though the max loss is about 39,000, I would not allow it to go there. So once my loss is around 10,000, I would be getting out. So yeah, that's the plan. And even when it's kind of going one way or the other, I've tried to manage the trade by adjusting my position so that I don't get into the max loss trade, so that I have to stop out. So, yeah, that is the basis for SBI. And if we go to the next second trade, it is ITC. So ITC trade, I mean, for SBI, the basis was that because it was an high IVP, so I wanted to short it. So that was the reason for SBI. And for ITC, the rationale was that it was kind of consolidating in this range between 440 and 420 range. So yeah, so I thought that it should be testing the resistance. So you see here, you see the 450 range has been a place where it has faced a lot of resistance. So I thought my bet was that it would be going and testing 450. So I've taken bull call spread. So I bought 450 call and sold 450, 440 call and 450 call. Bull call spread, but soon I realized that that is not going to happen. The next day there was a gap down and it again followed, so I've sold bull put spread. So I've shorted 430 call with a hedge. So just to provide a break even. So if you see here, uh, right, so in this range you have a kind of a break even 720 rupees per, so that's not much, right? So the rationale is that the ITC will go up about 450 odd or 445 or so. That was the rationale, but seems like that won't be the case. So I've sold put spread as well, just to get some credits. And yeah, the same max loss applies for this as well. The max loss would be 10,000, so I would allow it to go beyond that. So once I hit the max loss, I would be out of this position as well. And yeah, so about talking about the adjustment, so it seems like ITC is going down. So my plan is that if it goes about 430, 420-ish range, so what I am planning to do is that book profits on this 450 call, and then make a short straddle at 4 430 and create an iron fly with the hedges and take it from there. So yeah, that is what I am planning to do for this trade. And this is a near month expiry, which is June. So I don't want to carry this trade into the last week. So I'm looking to exit it in the next week, which should be latest by 21st of February and 21st of June, Friday. So that should be the period of holding for this trade. And yeah, I'll keep posting the updates every day. So even the margin is used 85,000, so it's not a big hit on the margin as well. So that is the SBI trade. And finally, coming to the Nifty trades. I did quite a bit of intraday trade about kind of a short strangle. So I made about 4,000 profit. So that's another point. So talking about this, so I just uh, I mean managed the position throughout the intraday and ended up with this encounter, which is more bullish than bearish because I did see a lot of put writing during the day, but the market did reverse in the end. So not really sure if this position is the best. So, but the premiums are kind of same if you see this 52, 53, and 56. But the quantity, like I've sold 6 lots for the put option, and the call has only 4 lots. So I think I have a more risk on the downside. So if market opens down, then I think I would have to move my calls down or sell additional calls to hedge to manage this position tomorrow. So we have 2 days to expiry. So today is Tuesday, so we have Wednesday and Thursday. So I don't expect market to go beyond that. So if you see the candle as well, it's kind of indecisive for the past 2 days. So I don't expect market to breach either of the range, but yeah, there could be volatility in the intraday. But yeah, so I think I should be good to manage these two for the day. And I also have about 1.4 lakhs of margin which is available to manage these positions. So I don't think it would be a big deal. So yeah, ITC, SBI are not trades that I need to actively manage because these are monthly expiries. So I can use this 1,40,000 for the Nifty trades that I. Yeah, so that is the rationale for the trades that I've taken, the open positions that I have for the 11th of June. And yeah, I'll be posting updates every day. So yeah, that's it. That's it for today. Thank you.